full-scale presentation, there was a panel discussion where we invited people from the industry as well. So in Karachi, it was from the panelists, it was Zafar Ahmed Khan and Kamran Mirza, and we have some very good discussion with respect to this key audit matter as well. And similarly in Lahore and Islamabad, there are people from industry as well. So a clear engagement, the institute has been doing, and this very session, I think, to the best of my, memory, institute has never directly approached companies to have a exclusive session for listed companies. So this is a session where we have invited, all the relevant people, because from our standpoint, it is the CEO, because from the business side, that is relevance for the CFO is regularly engaging with the auditors, and that's a bridge between the board and the auditor. So they are also invited, and audit committee chairmen who are at the end of the day going to take it to the board. So we are trying to reach as best as we can. And certainly now, as I said, that there will be engagement with the regulators. We are already engaged, but now a very specific session that we are going to have with the regulators, so that subsequently all of us should be on the same page as to the understanding. Because key audit matters is not a qualification. This is not any adverse observation. This is something where the auditor has spent most of his time because of the most significant matter. So I think this all has been done, and you have rightly pointed out, because this is a big change, and we all have to be ready for that, and we should start engaging with our specific scenario with our, the company and the auditor, and they should start engaging. And before the year end, I think there should be some arrangements that how they have to deal with this matter at the end of the day, because the report is going to out somewhere. Some companies have a very tight deadline of January, and so this is going to be tight. Okay, Raymond. Shoaib, I just.
I think I probably know the answer to this, but there was an earlier statement that is a company with 2 cans necessarily better than a company with 10 cans, or is simply less complex. Now, given that, and given the level of sort of general investor education awareness, etc., would there be any possibility that when you put a key audit matter in the audit report, especially if it relates to things like impairment testing, uncertainty, uncertainty estimates, all that, that you would actually say that this is the issue, and this is where management's response is, and this is something with which we concur. I don't know what we would ever say, I agree with what management has done. We always say we don't disagree. But given these factors, would it at least be a consideration to maybe say that we concur with the approach, or we concur with this issue, etc. And secondly, to the earlier question, that will management have an opportunity to respond? And that response could be either in the director's report or as part of the goals. Would every key audit matter necessarily reference that this issue is discussed in further details in such and such place?
I think just want to highlight one thing. The number of key audit matters will not directly depend on only the complexity of the company, but also the level of understanding of the auditors as well about the company. Now, so the audit firms, I think it is going to be a point of distinction between and a measure of audit quality to some extent, that the level of understanding and insight that the auditor can express about a company as compared to the other auditors. So I think it's one of the measures of the quality of the audit as well, and it will therefore be a big kind of a change in the way the auditors take the audit and they express the level of understanding as well, because it is going to impact the business of the audit firms as well.
Some of this obviously cannot be avoided because, as I said, there would be a tendency in terms of equating efficiencies and better management on the basis of the number of CAM raised. But at the end of the day, I suppose as people get more used to it, as people become more aware, then they ought to read what actually those scams contain. Whether they are extremely consequential or they are not that consequential. But yes, in the initial days, there would be this tendency. But again, at the expense of repeating, you or the companies will have to plan it much better than they are actually doing now. Primarily because, as I said, that there would be extensive discussions with the auditors in order to ensure that everyone is on the same wavelength in terms of what is to be reported and what is to be disclosed as part of CAM. Otherwise, if you leave it right to the end, then the problems will arise. And as a personal view, I agree with what Wahab has said, that yes, we may be late, I don't know. But I always feel that where something has to be implemented, it is better to do it now rather than leave it later. Because again, that tendency would arise that, oh, there's enough time. And I can give you an example. I was discussing at a recent board meeting about this change that is coming in. And the tendency was, there's enough time, why do we have to worry about it? We can cross the bridge when we come to it. So even if you were to extend it, this complexity would obviously come about and people will feel that, okay, we have got another 1 year and we will look at it when the time comes nearer. So it is far better to bite the pill now and take the step and take the plunge and prepare for it.
Just to respond very specifically, Raymond, this type of report, the key audit matter, this is first introduced in UK, right? And this was introduced in 2013. So probably this is going to be the third year in UK where such reports are already in field. In UK, the difference of requirement there and in Pakistan is that in the international standards and auditing is that auditor also has to give the outcome, the finding, its conclusion of the matter. So what you are, asking is whether the auditor is going to say, whether they have. So I think any matter which is a key audit matter means that the auditor is in agreement. And this is also going to be in some wording form, will be in the key audit matter descriptions. So, but this is a difference in UK requirements and the international standards auditing, because post the UK requirement, this was felt from the comments that they have internationally, that UK requirement is leaving a bit that how the auditor has, what is the outcome of that significant matter. So I think that is going to be addressed. Ji, sure. Yeah. Sorry, just yes.
My first question and a comment. The question is related to, from what I understood, that the key auditing matter would be identification and some discussion or conclusion also. So don't you feel that it will have an impact of undermining the importance of financial statement and people using the audit report and the key audit matters as a substitute for a detailed review of the financial statement? Is it, if you will take it as a shortcut? That's the first question.
Okay. You see, from the stakeholders and user standpoint, of course, it is the complete financial statement that has to be analyzed and looked at and should be read. The change that this audit report is bringing is that all this work was already done. And we all know that at the end of the day, when the auditor comes to the audit committee, there are very few matters that gets discussed over there. So this work is already done. The change that is being proposed or that has been described is now this discussion, these important, significant or most significant matters now have to be in the audit report, So that, for a reader standpoint, it gives the insight into the work of the auditor rather than the company. It is the company which is giving the financial statement. So to an extent, yes, when people are going to read the audit report, of course, they will more focused on these are the key matters which auditors, where the attention of the auditor was during the audit. But of course, the complete financial statement has to be looked at.
Other comment is that I think Guru also mentioned that the audit report over the years has not changed. And what I have observed is that over the last 20 years, the scope of the representation letter has increased tremendously. So, and the auditor is completely absorbed in light of the representation letter. So if I'm reading the financial statement and the audit report in conjunction with the representation letter, which is just between a document between the management and the auditor and is not just a public viewing, then certainly I will be very uncomfortable reading the financial statement and the auditor's report. So please help me understand how identification of these audit matters will add value to the auditor's report. To the end of the day, the auditor gets complete absorbment from what, and there's a complete statement that nobody dikhaya gaya, maine dekh liya, wo theek tha, nahi dikhaya gaya. It's a very good responsibility.
Let me say one thing. In all the cases of audit failure that internationally you see, and representation letter has hardly saved any of the auditors. So no matter whatever we take as a representation, it's not a savior when you really commit a mistake or a negligence. So to say that yes, representation letter gives some comfort to the auditors in terms of committing the management about what they provide for the audit information, and fairly so. And the length of the management representation is not only increased because of the auditor's apprehensions, but because of the complexity of the businesses and the accounting as well. Now, in older days, I think who had think of the goodwill impairment testing involving kind of experts and assumptions and deferred tax related projections with future outcomes and future business assumptions to be made available to the auditor in order to form a view about the financial statement. No, these complexities have increased, and therefore the representation letter length have increased. But whatever we take as representation letter, I think it will not save us when there is a real audit failure.
That's a tough one. My response would be that for unlisted companies, certainly this key audit requirement is not mandated by the standard, but it does give this provision that the local law, the regulation can make this mandatory for unlisted. But at the moment, this is not the intention and not something that is being looked at. Yes, I think if you look around the world, public interest entities are now in the microscope. So any entity which has any kind of public interest, certainly the regulations around that are increasing, and the focus of attention by the regulators, by the investors, by the general public has increasing. So yes, this is kind of a disadvantage. Like this is an equivalent disadvantage for many other listed company disadvantage if somebody has. So I think that is something that we have to understand and live.
Just to add, actually, this disadvantage, if you were to call this as a disadvantage, already